What's up YouTube? Welcome back to another series of my YouTube videos. So in this video, I'm going to show you an easy way you can use to trade gold. Like an easy way if you're a price action trader and use mainly support and resistance, maybe with other confluences like trendline, Fibonacci 2, like I usually do on my own personal trading strategy. I use support and resistance. So I'm going to teach you an easy way you can an easy way you can use to trade gold if you are a break and retest person that that kind of a strategy like me. So I'm going to show you an easy way you can use to trade gold with support and resistance. Okay, let's get into the video. So there are three types of market condition. You feel me? There are three types of market condition, and the the main one, or let's say, not there's no main one, but the current market structure determines how you are going to be determines how you are going to make your decision. Either you're making a buy or you're making a sell. So for instance, now we have three market conditions. We have let me use my this thing. um we have when the market is trending to the upside. So market is creating a series of higher high, higher low, higher high, higher low, higher high, higher low. So in this kind of market structure now, you can see that okay, this is a what? A bullish market structure to the upside. You feel me? Aha. So though on the main chart, it's not gonna look like this. It's always a bit rougher than it looks on the with this illustration. So, but the main thing I want to point out for you that is that when the market is pointing to the upside is what is known as the word bullish market structure. Aha. So on the other hand, we also have a bearish market structure. So bearish market structure is when the market is creating a series of lower low, lower high, lower low, lower high, lower low, lower high. So in this kind of market structure scenario now, you can see that okay, what the market is what um trending to the downside, which is a bearish market structure. So we can as well go from bullish market structure what to a bearish market structure. You feel me? To a bearish market structure. Something like this. So the market was trending to the upside, and then all of a sudden it started, trending to the downside where you have a change of character around this zone. So you can go from bearish and from bullish to bearish. So I'm going to explain I'm going to show you a very sweet example for you to be able to use this strategy effectively and it work perfectly. I'm not gonna lie. So that's one. So there's this too. So this is the bearish side of the market structure, and this is the bullish side of the market structure. So and then I'm putting out this thing for you guys so that you can have a basic knowledge of what support and resistance is. You feel me? So you can use this previous price data to determine what this bullish market structure might end or might reverse to, or might continue from. That's why I'm bringing it together like this so that you can have a basic knowledge of how the thing really works. So so this is the bullish market structure and this is the bearish market structure. And we have another scenario whereby the market is not going to the uptrend, is not and is not going to the downside as well. So market is going through a series of higher high, higher low. Higher high, yeah, higher low. Higher low, higher high, and then it fails to break out of this zone and create a equal low, and then do the same thing over here, and then it continues like that, like that, like that, and like that. Now this is what we call what? A ranging market. Now this market now fails to what? Break out of this zone. It fails to break out of this zone, and it fails to break out of this western zone. You feel me? So this part of the whole thing, this side, which is this very side, is known as what? Is known as the resistant area. Is known as the resistant area, and this other side as well is known as the support area. So mainly when we have about three touches, we have one, two, three. You can say that what this resistance is a very strong resistance and can count it as valid support resistance area. The same thing applies to this one. You can count this one, two, and three. You can count it as valid support area. So when you have a fourth touch on this one, you can now decide to sell from this side. But trading ranging market is very, very, very not what it's very, very risky, and it is not advisable for you to trade, but there are ways you can, there are ways you can use to trade this very ranging market. I'm seeing a lot of people do it, and sometimes I do it too. But I have to have about 3 to 4 conferences before I take that trade, or maybe three. Most time it's three. So you can take your sell position from this zone when it gets to the fourth touch, when it's making a fourth touch, and see a bearish reversal to the downside. And sometimes, let me give you an easy tips that I use, the things that I use in this type of market scenario. Let me give you a useful tip you can use to trade this kind of, so the market is not always going like, straight up like that. No, we always have something like this, like this, like this, like this, like this, like this, and then we have one touch, and then starting coming down again, coming down again, then coming down, coming down. So most are on the, let me just go to the third one or the fourth one. The fourth one maybe, or the third one, where you see a market creating like something like this, like this, like this, like this, a series of higher high, higher low, higher high, higher low, higher high, higher low, and then it gets to this zone. So when it gets to this zone, you just see a bearish signal, bearish coffin bar, or bearish signal, or bearish candlestick pattern to the downside. You don't just enter because what is a bearish market, is on the resistance zone. No, you don't just enter like that. What I always do, the moment it gets to this zone, this is what I expect. I will expect to take out this low, or might not be able to take out this low, but I'll see a bearish candlestick pattern. That's one. Then a retest. That's two. Then we'll continue to downside. This is two confluences now. Additional confluences that might make you have an edge, or give you that confidence in that this trade, is that you can plot out your what, your mini trend line on the lower time frame, maybe 15 minutes. Sometimes I have it on the 1 hour time frame as well. So you can plot out this your what trend line. So you see that market breaks with a candlestick on this zone, and then make a retest, and then you can continue what selling. This is the kind of strategy that I always use. If you've been following my channel, uh-huh. So this is the ranging market, and then this is the what, the trading market, and then the what, the bearish market structure. So in the bullish market structure, like I explained, in this ranging market is almost like is what is just the same thing, but just that this one is like moving to the upside, whereas this one is just ranging. So the way to trade this bullish market structure is very simple, just the same strategy. So the market has a series of higher high. This is the high, this is the high, and then what? This is the low, and then this high, this low cause a breakout from this zone. Okay, let me just mark out this very zone. Now you can say this is a what, a strong, this is a what, a resistance zone. So when the market breaks out of this zone and comes back, so most of the time what it does is, when it comes to this kind of zone, is what, take out liquidity that has formed around this zone. I'm going to do a video on liquidity as well. So what it does is take out liquidity that is from around this zone before it continues to the upside. So when you see the market coming to the upside, again, when after breaking out the resistance zone, you can wait for it to do something like this, and then continue before you can take a buy to the upside. This is just the basic knowledge for you to understand what the breakout and retest is. I'm going to show you on the real chart. On the real chart, I'm going to show you how it looks. So the same thing applies to this one, vice versa. Let me just invert this thing so that you can know. Okay, when the market is trending to the upside and the downside, this is what it looks like. So we have a breakout of this support area, and then we have a retest from this zone that you go for. But this is just a basic knowledge of how to trade, support and resistance. So let me show you on the real chart, on the real life market. Aha. Let me show you on the real life market. So this is good. And the reason why I decided to use good is that, okay, I just want to use those good because I saw something on the good. I saw some like a basic way to explain this thing for you guys, so that I can have a proper understanding of what support and resistance is. So let's go to the daily time frame. So you can see okay, I inverted it. Sorry, I inverted it. So gold has been trending to the upside. And what you want to do when the market is trending to the upside is what is you look for your buys. Okay, let me show you an example. We have a series of higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher, and this one breaks out of this what the previous low that was formed that makes it look like that makes it is what this zone is change of character. Aha. So what you want to do now is you see that okay, this is a what a bullish market structure, and what you want to do on a bullish market structure is that you want to look for what a buying opportunity. Now let me scale out to 4 hour time frame and let's mark out our zone. The one we do on the 1 hour a daily time frame is just to see the overall trend of the market. So if you look at the 4 hour time frame as well, we're creating a series of lower low, lower high, lower low, lower high, lower low, just like that, something like that. And then we change the character from this zone. And then we started trending to the upside. So this is just a basic what basic knowledge, like I told you. So and then if you look at this zone again, this very current market structure, price, current market action. So you can see that we're going to what we are going bullish. Let me show you a trend line for you guys to see. You can see that we are going bullish. We are going bullish. This is just the trend line for you guys to see that we are what we are going bullish. uh So when we are going bullish, I told you that when we in a very bullish market structure, what we want to do is look for a buying opportunity. So when we are going bullish now, we can see that okay. Let me mark out this zone. This was the what the previous resistant area that broke out. And I told you most of the time when this most of these things are from maybe when you have this no when the price comes to this discount zone, what does most of the time is take out the liquidity from around this zone. If you go to the one the lower time frame, you will see a lot of liquidity right around this zone. So what it does is that take it out and then continue its bullish movement. So we had a support resistance area right around here, and then what happened next is that I'm trying to reduce this thing. What happened next is that you see the market comes back, break out of this resistance zone to come a higher high, and then come to retest, and then what continue. So another one is here. If you don't count this one, you can see this other one as well in this zone. What it does is just take a liquidity and continue its bullish movement, and then we have another one as well in this zone. Okay, we have another one at this zone where you just break out and then retest. You feel me? So this is the basic knowledge of how to trade support and resistance. You feel me? Support and resistance. So let me zoom it. Sorry if you are hearing this thing from my background, please ignore this thing. There's a truck nearby where I'm doing this video. I'm not at home because of network. I have to look for a place to do this thing, just for you, just to explain. Explain how the concept of breakout and retest work. So you can see we had a breakout from this zone as well. We had the breakout from this resistance zone down to the upside, and then what happened next? We have a retest and then a continuation. So as you can see, you can plot out this one as well. You can plot out this one, this recent one. This is a SWOT resistance area, and then you can anticipate that when market get to this zone to buy and continue to the upside. So this is in a what in a bullish market scenario, and what in this something happens here. You can see you put your risk reward right here, and then your SL right above the current low. So this is like you can get almost 1 is to 3, and then we have another one right here and here, and then you target the high. This is all in the 4 hour time frame, but let's go to an hour time frame. I'm going to do a candlestick confirmation video so that you can see the kind of candlestick I use for entry. So you enter this market right around this zone when it has taken out the liquidity and comes back to the test, and then look for your entry right around this zone. You can see this one. You have a bullish engulfing bar to the upside, and then you can wait for this one as well to come and then take your buy to the upside. So the same thing applies to the same thing applies to the bearish market structure. Bearish market structure. So the when the market is creating a series of lower low, lower high, lower low, lower high. So you just wait for it to come and retest and then continue retest and continue. So this is a basic knowledge. If you are a break and retest person, if you're a break and retest person and you trade breaker a lot, this is a and you want to trade breaker a lot, sorry. This is a simple way of what trading support and what resistance. So you can anticipate a retest on this zone and then go long. But I just inverted it so that I can explain better. But the main market structure is bullish. So you want to anticipate a retest and then continue to the upside. Aha. So I hope this video put out like explain with I hope I was able to explain how to trade break and retails on this video for you properly. But if you feel like there's something you don't understand, you can drop it on the comment section and I'm going to do a video about it. So you know what? And okay, there are things you can actually implement if you're a person that looks for a lot of confluences. Let me show you for instance. Let me delete this thing. Let me delete this one as well. So if you're a person like me that always look out for conferences a lot, so most of the time what I do is when I see a breakout of resistance area, you see this is a resistance area right around here. If you're the kind of person like me, so that always trade with a lot like 3 to 4 conferences but minimum of 3 confluences. What I like to do is, so the moment I plot out a breakout around this zone, this is the breakout. What I want to do is I want to use the low that create the breakout. The low, which is this one that create the breakout. This was the low that caused this whole breakout to the upside. So I'll plot out my Fibonacci to and mark out from the low to the high that it started retracing from, which is this one. And if you've been watching my videos, you know that okay, this is 0.62 level is where I normally take my entry from. And the moment it gets here, I'll look for what a bullish engulfing bar to the downside, which is this one. You can see this zone, we have a money star candlestick pattern. Money star candlestick pattern. So I'll enter above the moment the candle closes and I place my SL around below the low that was formed, and then I'll target what? And I'll target and the high, which is this one. This is very high. And what happened? You can see that the market what it comes hit my profit. It's simple. Even right around this zone, the low that caused the breakout, you can look for a low, a significant low. So you can see that there was a this is the low that caused the breakout. This was the low that caused the breakout, and then you market it down to where it started retreating from. And then the moment you get to this 0.62, you can see the bullish engulfing bar that was formed. Even though I didn't enter from my own zone, this is under confirmation. This is under money star candlestick. There's number the first bearish candlestick that was formed is what is bearish candlestick, which is this one. Then the next one was this, like dodgy candlestick. Then the next one was this bullish that engulfed the whole initial what bearish candlestick that was formed. So I'll make my entry right around this one and then place my SL below it. So I'll go to the 1 hour, 15-minute time frame. So I made my entry around this zone. And I made my entry around this zone and then go off for the high that was formed, which is this one. Aha. Just like that, this is a basic way of trading. You know what? Trading a support and resistance. I don't know why this thing is stopped. So that's the end of this video. I just want to bring out this, I saw it and I say, okay, why not? Let me just share it for you guys so you can have a basic knowledge of how I trade. This is how I trade the market every single time. So, you know what? See you on the next video. Thank you so much for watching. If you have not subscribed to this video, make sure you hit the subscribe button on the and make sure you subscribe to this channel. So, yeah, see you on the next video.